revolution is going to work. Tens of millions of people must switch to electric cars over the next decade to feed the experience curve. But there are also new technologies coming soon, like silicon anodes, solid-state batteries, and lithium air, that could skip us ahead on the experience curve.
Good morning and welcome to Bloomberg Quint, India's first digitalized streaming business news service. I'm Neeraj Shah. Good morning, Neeraj.
Good morning, Neeraj, and a very good morning to all of our viewers. Let's get straight down to the headlines this morning. Asian equities start 2018 in the green. The Hang Seng is the top gainer among Asian peers. Core sector growth hits a 13-month high of 6.8% in November. A base effect-driven rise in cement and steel output pushes growth rates higher. Salil Parekh takes charge at Infosys today. The former Capgemini executive board member gets a 5-year term as the MD and CEO of Infosys. And the US will continue to withhold $255 million in military aid to Pakistan as it reviews the nation's cooperation on combating terror.
And boy, has that tweet raised up a bit of a storm. If you just go to Donald Trump's Twitter and see the number of likes, the retweets, and the messages to that.
Maximum from the subcontinent, I'm sure.
Yeah, of course, naturally so. And well, a lot more radical tweets as well in response. But yeah, that's an important one, all right. However, that doesn't impact trade as much. What does? Well, a lot of things, quite frankly. If you just look at how trade, shut shop yesterday, we've already told you that Asian markets are likely to start off marginally higher. So the SGX Nifty points towards a fairly flat day of trade. So if you bring up the SGX Nifty, it doesn't really promise any big moves there. But it was. It wasn't the prettiest last 1 hour of trade, and because of that last 1 hour, we had the worst start to the Indian markets in 25 years. Since 1993, this was the worst first opening day of the calendar year. There was arguably local selling in large caps. Mid caps relatively were better placed. The market breadth, remember, at close was still positive. And I say local selling in large caps because if you just look at the flows, the FI net flows were positive. I think it was selling in cash market selling by DIIs that probably led to this, because the DII sell number is a large 1,300 crores. I don't remember significantly large bulk deals that would have happened. So clutch of selling that happened possibly in the cash market and possibly by the local funds. And we all heard about these couple of rumors that were floating around in the markets. That plus earnings promises that this month will be a fairly volatile month. Largely, one, because of results, yes, but also, as I was saying yesterday, every message there, every comment here will all lead to heightened trading activity, as was evident in the case yesterday as well. You don't know whether that will see a follow-up or no, but for the day, it has an impact. So do watch out. It could be an interesting one. I think today, among stocks to watch immediately, TVS Motors could be an interesting one. The numbers are good, about 39% numbers, slightly better than estimated. The only question mark is the market willing to give that bit of an uptick, or will the market say that, hey, this was because of demonetization, difficult to predict, and therefore let's not either sell or buy any of the auto names based on the December auto sales numbers. Let's wait for Jan, Feb, March to see the normal run rate. GMR Infra, one more name wherein a clutch of suitors emerge. So Adani, Neyveli Lignite, Sembcorp are in the race to buy the power assets, power projects for GMR Infra, not the company, the power projects, and that should be interesting for GMR Infra as well. Remember, we've seen suitors for specific projects for a lot of companies. This one is no different. Let's wait and watch if there is more in store for this one. I thought M&M was interesting. CLSA has been rather bullish. They have upped the target price, I think, to 910 from 885. Watch out for this one, and watch out for the other auto sales numbers as well, because all of those will come out during the course of the day, the remaining ones, and we might see specific stock-specific activity. There are a clutch of small caps as well, which we'll discuss a bit later on in the show. But these three I thought stood out in terms of stocks.
Neeraj, just taking a cue from the auto sales number and this whole year-on-year thing that's playing out. So I know there were a lot of headlines saying that the core sector data is looking really strong, etc. But if you look at the internals of the core sector data, not that great. So the two sectors that have seen the rise are steel and cement, both of which have a base effect at play. So in November 16, the cement sector grew at just 0.5%. So it's on that base that you're seeing a 7 17% growth. Same for steel, where you had just about a 5.4% growth in November 16, and on the back of that, you've seen this 16.6%. One way to strip out this base effect issue is to look at index levels. I don't have the graphics for you on the screen, but just take my word for it. If you look at index levels, the November 17 index level is more or less in line with what we've done since the start of this fiscal year, with the exception of October 17. So just last month, you had seen a jump in the index level. Now you're at about 123.9, so you've flattened out. And my point simply is that this one number, while 13-month highs makes for a great headline, I'm not sure yet that it indicates any sort of a turnaround. I particularly want to point to the electricity numbers, because the electricity numbers on a month-on-month basis were actually down if you look at the index level. So I wouldn't go too far in interpreting this core sector data to say that there's strength in the economy. There may be strength, but this is not the data point to focus on.
Okay, so the number looks pretty, but don't focus on this number. I think that's the sum and substance of what Ira is trying to say. Anyways, so that's, of course, with regards to core sector. Let's tell you what we have on first word today. No surprises for guessing. Salil Parekh takes charge at Infosys today, and we'll talk about that and the implications thereof. We'll also talk about whether this rally that we've seen in the last 20 days or last 1 month in the mid caps and the small caps, whether it inspires any kind of confidence. And as Bandhan Bank gets set to make its debut on Dalal Street, we look at how it stacks up against some of its peers. But first, Infosys. Salil Parekh takes over as Infosys CEO today. The former Capgemini board member will be the 6th CEO to take charge. I think he's been given a rope of about 5 years. He's also the second non-Infosian to be brought in to head the company after his predecessor Vishal Sikka left. Of course, his term was short-lived. But here's Agam to tell us what the industry expects, or industry veterans have to say, for Parekh and the challenges he faces at Infosys.
Right, Neeraj, so as you've already mentioned that he is appointed as the CEO and MD for 5 years. Previously, in his stint at Capgemini, he was the Group Executive Board member, and he was also the North American Executive Council Chairman for Capgemini. Moving in, what does Nandan Nilekani have to say about the appointment? Well, he said that Salil Parekh has a very strong track record of executing business turnarounds and also managing successful acquisitions. R. Chandrasekaran, the president of NASSCOM, also says that he has multinational experience and global exposure, which will of course be a big benefit for Infosys. But he also says that this brings down the curtains on various issues which rose during Sikka's period. In terms of the street views as well, and we will be talking to Sudin Apte later on in the day, but the last time I spoke to him, he did suggest that he's a good person to get from the outside. That is an advantage. He's very senior and also very close to clients through his experience in Capgemini. He's a good fit when it comes to experience, and of course he is well versed with profitability. And that said, he's also the fact that this appointment has not got delayed any further will also be taken as a positive. That said, what are the challenges that Salil Parekh faces? First, of course, is the growth. We know that the company has cut its FY18 guidance, but more importantly, we need to see whether or not Infosys can eventually come back to higher than industry average growth, and of course bring back stability to organizational structure, of course quicker demand to clients' needs and the adaptation to it. Moreover, we're also looking at reinstating confidence among not just clients but also employees, and of course finally, and perhaps the most important one, will be to share a rapport with the founders and shareholders. So these are some of the challenges that Salil Parekh is up for as he takes over as CEO and MD of Infosys.
Thanks so much for that. Big day for Salil Parekh, big day for Infosys. I suspect as you get around to the earnings season, you'll probably hear a little bit of what is in Salil Parekh's mind. But what should be on Salil Parekh's mind, we will speak to Sudin Apte, as Agam has mentioned as well. About 9:30, we'll chat about what should be Infosys' focus from a business standpoint from here. That's coming up. Meantime, let's get back to the markets. The most recent leg of the market rally has seen stocks in the broader market outperform the large cap benchmarks. Is this an indication of growing strength of Indian equities, or is this a reason to worry about what's actually going on? Neeraj is at the wall. He's got some interesting charts as well. Neeraj, it's always, you can read it one way. The smaller stocks are rallying, so maybe there's some froth building up. On the other hand, like you said, maybe it's an indication of broader strength in the market. Which one is it?
Yeah, so, normally you wouldn't have any problems if indeed the broader markets are moving up. I mean, the index can only move up as much. After a point of time, there are only 50 stocks in the Nifty, but more stocks at the broader end of the spectrum. But the nature of the stocks moving up is interesting, and which is what led me to do this piece. Now, this is the 1 month performance, and you look at the top 10 gainers. Forget the losers, okay? Just ignore the losers. There are not too many losers any which ways, 1 or 2 names. But look at the names that have gained the most. There is RCom, which is news specific, but again, not an investment idea by any of the pundits per se, right? It's more a trading play. Unitech, DB Realty, again, a couple of ADAG names. Jayaprakash Associates, Built, it may be the largest paper player, but hey, it's coming out of a bag full of problems, or probably still is and trying to come out. Bombay Dyeing is an exception maybe, but it's a stock that has really rallied quite a bit already. Jayaprakash Power Ventures, MTNL. These are the top 10 names, and you got to ask yourself that does this set of stocks which have gained the most in the last 1 month give any confidence to an investor that there is meat to this rally? That is not to say that companies which have gained about 15-20% are all without logic. There might be. I'm just saying that the top draw for the last 1 month isn't something that inspires confidence. Now, you always look at relative valuations, large caps versus mid caps, and I know there's a lot of talk about how large caps are expensive. Let me bring up the 1 year forward PE estimates for both the mid cap and the small cap indices, and you will see the S&P BSE mid cap index PE 1 year forward is over 30 times. That is probably one of the highest levels that the mid-cap index has been at. It's been at an all-time high level for a while now. The trailing is substantially higher, but I'm saying even the forward PE, even if you bake in earnings estimates for a bunch of these companies, the PE numbers are not awe-inspiring. They don't give too much of comfort. You would probably, a blue-blooded investor would not want to commit large sums of money to the markets at large, maybe to individual names, but to the markets at large. Similarly for the small cap space as well, fairly high valuations. Remember, this is not to predict that the markets will correct or anything. We're just trying to question the nature of the rally and trying to mention whether or not there is some bit of confidence that people would have when they're looking at the kind of stocks that are moving around. And lastly, speaking of Anil Dhirubhai Ambani Group stocks era, December 19th was when this first leg of move started in RCom. December 20th was when the exchanges sought clarification about the price rise. So I've chosen that date. You would wonder, why have I chosen December 19th as the reference date? But that was because that's when the rally in RCom started to take place. And then, of course, the subsequent events. So these were the market cap levels on December 19th. These are the market cap levels as of yesterday. And look at the gains. Now, RCom, you would argue that, hey, because there are news, the stock has gone up 178%. Reliance Naval has rallied 80% from those lows. Reliance Power, 66%. Reliance Capital, 42%. Infra, it's again entered into a deal. You could argue that it's becoming debt-free, and therefore that rally seems a lot more logical. 30% you'd probably give. But these are the kind of gains that what was arguably being dumped as a group to avoid on December 15th has had in 15 trading sessions. It's just remarkable the kind of money that is flowing in, or the kind of trading positions that are flowing in mid-caps by and large. This is just an illustrative name group. If you look at the first chart, you've seen the names. It's not just ADAG, a clutch of other names. And therefore, some people would stand up and question that, hey, now we're just starting to look slightly uncomfortable on the nature of the rally. The nature of the rally needs to change a bit. No problems with mid-caps moving up. They should. But just that you probably need a lot more stable names to start moving around, as opposed to what are not pure play investment bets starting to move on. 1 or 2 of them maybe. For, as I said, Reliance Infra maybe. Fabulous. I mean, it's under-owned. Now it's debt-free on a standalone basis as well. So maybe there is merit there, but not all.
Just go back to that chart and tell me what you think of this. So the first chart that Neeraj put up. So even if you take out Reliance, or RCom, so a lot of them are these stressed companies, right? With the exception of a Bombay Dyeing and an MTNL, perhaps a lot of these are in the stressed companies list. And I think you've been talking about the fact that market is starting to look at some of these companies. It's interesting to me that if you go down to the worst performing, that if you're expecting a resolution on stressed assets, why are you negative on a Union Bank, a Bank of India, etc.? I can understand Bank of India perhaps because they got put into that prompt corrective action. But if you're expecting resolution on stressed assets, then that should start reflecting on public sector banks, which have had the biggest set of the problem.
Oh, that's an interesting point as well, yes. But yeah.
Well, I could be completely wrong, but it strikes me as strange that we are positive on debt-ridden companies because we think the cycle is turning, and we are not positive on the guys who are giving the debt.
And at that point of time when that big boost of recapitalization is already there behind them as a tailwind as well. Yeah, well, pertinent point. Plus, I think most of them, Ida, if I'm not wrong, have raised money as well, right? QIPs for a lot of them
they've started, yeah. So it's interesting. But yeah, maybe they think that the sort of the roadmap for public sector banks is not clear. But that's
again a question, right, as to the nature of the rally.
Yes, absolutely. Very, very pertinent question. Neeraj bringing out some of the stocks that have rallied and what that says about the structure of the market. Speaking of financials, we've got Bandhan Bank, which has filed its draft red herring prospectus. The Kolkata-based bank is looking to go public. It was one of the two last lenders to have gotten a license, a scheduled commercial bank license. So it was IDFC and it was Bandhan Bank. And Bandhan Bank is ready to go to the market. Yatin is standing by to give us some details of what that IPO will entail. Yatin.
Well, if you look at Bandhan Bank, it's a subsidiary of Bandhan Financial Holdings, which was given a banking license by the RBI. Now in April 2014, RBI finalized the entire process for these licenses, and final nod was given by RBI for the Bandhan Bank formation in June 2015. Of course, if you look at Bandhan Bank, it has been backed by marquee investors like International Financial Corp, SIDBI, GIC's investment arm. So a lot of institutional investors already sitting in that bank before this particular IPO. Now, what we gather from the draft red herring prospectus is that the total issue size could be close to 11.9 crore shares, of which 9.76 crore shares would be in terms of the fresh issue, and the remainder would be an offer for sale by the International Finance Corporation. So if you look at the IPO, probably 90% of the proceeds will be fresh issue proceeds that the bank will receive, and the remainder will be an offer for sale by IFC. Now, if you look at the company's network, and according to their filing September 17 data, it says that in total the Bandhan Bank has close to 864 bank branches and close to 400 ATMs. And not only that, nearly 97% of their total loan book is to the priority sector. So interesting in terms of the overall mix. If you look at Bandhan Bank, probably their ROEs and the net interest margins and return on equity and return on capital is probably highest in the banking space as on today. Their CASA ratio stood at 28.2%, and gross NPAs and asset quality clearly surprising, wherein their gross NPAs as on September 2017 was a mere 1.47%. And that is something interesting that a bank can have of this size, and probably with an exposure to the priority sector. The Economic Times also reported that the company will look at diluting close to 10% stake for a consideration of 5,000 crores, which means that the valuation that Bandhan Bank is looking at this point in time would be close to 50,000 crores. And if you look at the transaction in 2015, which happened between various institutional investors, they pegged the valuation of close to 29,000 crores for the bank, which had raised close to 1,500 crore then. So probably in 2015, the valuation was close to 30,000 crores, and today probably they are asking for a valuation of 50,000 crores.
All right, Yatin, thanks for those details. Just want to look at Bandhan Bank in what you should compare it to, Neeraj.
Okay.
Now, look, it's a scheduled commercial bank. So technically, you can compare it with at least IDFC and then the Yeses of the world, etc. The relatively newer one. You can't possibly start comparing it to HDFC and ICICI Bank. But if you look at their business profile, their business is still more like a micro lender. So I think almost 90% of their business, 90% of their loan book is microfinance. Small and medium loans is 3%, retail assets is just 1.7%, and small enterprise loans is 4.5%. So the way to look at it is two. One, you can of course compare it with IDFC Bank, the last two that got the license, to try and understand how the two have managed to do in various aspects. And just stay with that chart for a minute. But you can also try and compare them to small finance banks, because my sense is that at this point in time, their business profile is more like a small finance bank. I will not compare them to the micro lenders because they have the ability to collect liabilities. But in terms of the business profile, they're more like an Ujjivan, more like an Equitas, perhaps most like an Ujjivan than anybody else. So you compare them in two buckets. You compare them to IDFC Bank, and then you compare them to Equitas and Ujjivan. If you compare them to IDFC Bank, And don't look at the loans outstanding, because IDFC had a legacy book that they came with. But if you see the advances growth, I think they've been doing a decent job in terms of growth in advances. Deposits, they're a little bit lower in terms of quantum and also in terms of growth from IDFC. But that is because IDFC has been raising a whole lot of wholesale deposits to fund its book. So if you look at the CASA numbers actually, and that should be what matters for a new bank. A new bank, a lot of their success depends on how much CASA they can raise. And Bandhan has done a good job on that front. 30% CASA is a really good number from what you understand about what Bandhan Bank is doing. They're sticking to their core sort of clientele. They're going there and saying, hey, we were giving you these loans, these products, and now we can give you a whole host of other products. So stick with us. And it looks like, they've got some stickiness in their client profile. At least that's what you understand. We will speak to the management later on the show. We'll ask them about that. But 30% CASA is nothing to be scoffed at. Look at even the Equitases and the Ujjivans, which have just started raising liabilities, at 3% Ujjivan, I think a little bit higher than that from the last conversation that we had with the management. Equitas at about 5%. Bandhan Bank clearly stands apart in terms of their performance on the CASA front, and I do think that CASA is one of the best indicators of how quickly a bank is being able to become a bank from being, a micro lender or, sort of a non-finance bank kind of structure. If you look at some of the return ratios, and I think Yatin alluded to this as well, this is how they compare in terms of return ratios. Again, this is very tough to do a real comparison because they, IDFC comes with its legacy problems. Equitas and Ujjivan are just starting to transform. So at 4.5% return on average assets, they're doing fairly well. Return on equity also well ahead of most of these people, but it may moderate as you go ahead. And net interest margin currently at 10.4%, but again, that will change as it becomes more and more of a bank. But as things stand right now, I think the early start for Bandhan has been good. The answers that you need to get from the management, and Mr. Ghosh will join us at about 9:40, is what they expect their DNA to be 3-5 years down the line. Are they going to be a scheduled commercial bank? Are they going to be comparable to a Kotak Mahindra bank, a Yes Bank? Are they getting into at least semi-urban, if not urban areas, not the metros, but tier 2, tier 3? Or are they going to stay very closely focused on their core constituency, whether it's West Bengal, Bihar, etc., the 3 or 4 states that they lend in? Will they remain focused there? If so, then they're going to be more of a local area bank than they will be a scheduled commercial bank, and that will have an implication for what kind of returns they have, what kind of business growth you expect from them, what you should compare them to. So I think this is a very interesting case study in a entity which is a full-fledged universal bank, but may choose to be very selective in the business that it does. And I think if it does that, they will probably succeed more because they don't become just another Me Too lender. Right? Yeah. There are so many Me Too lenders out there, public sector banks, private sector banks. If they can create an identity with the advantage of being a scheduled commercial bank without having the restrictions that even a small finance bank has in terms of how much lending you have to do where, if they can pick and choose their markets and stick to their core, I think they'll do a fabulous job. But it's early days yet, so we don't know how quickly they'll grow, where they'll grow. Some questions to ask.
Yeah, but you would appreciate that, right? You have the choice of growing large, but you're growing selectively because you want to probably manage returns and asset quality and everything else, which is probably a boon as opposed to a bane. Yeah,
absolutely. So, I mean, early indications are that may be what they do.
Sure.
But this is very, very early days in in the life of a bank. As you become listed, pressures of growth, pressures of quarterly earnings, etc., always come into play. So we'll see how they do. But I think they just have a very, very strong hold. But then the flip side to that is that if you're very concentrated in business segment, in geographies, what happens if there are disruptions in those geographies and those business segments, right? I mean, their NPA numbers right now look great, but hypothetically, and this has been the problem with local area concentrated banks, if there is a problem in that region, then you suddenly see all of your ratios go out, so that is the benefit of diversification that you get. So it'll be interesting to see how they manage those, pulls and pressures. But they're an interesting entity. I'd love to see how the market looks at it. Does it look at it as a small finance bank, as a scheduled commercial bank, or a microfinance company?
That should be interesting. Okay. And we'll have that conversation a bit later on, as we've said as well. But that's all that we have on today's leg of First Word. Stay tuned, though, to Bloomberg Quint. We discuss investment strategies in 2018 with Saravana Kumar of LIC Mutual Fund. the leadership change at Infosys with Sudin Apte of Offshore Insights, and as we said, Bandhan Bank's IPO plans with the company's managing director, C.S. Ghosh. However, for now, full tilt towards the day's trade. Let's get in. Navneet Saluja is standing by with the FNO setup for the morning. Good morning, Navneet.
Good morning, Neeraj. Well, definitely it was not a great start to the first trading session of 2018. You saw the Nifty falling almost 1%, but what you saw was largely profit booking because the open interest for Nifty futures fell by 2%, but the premium definitely went up by about over 50 points. But if you look at Bank Nifty, that's been underperforming Nifty right from December series. So yesterday we did see fresh short build-up coming about for Bank Nifty futures as the open interest rose, and the premium also rose by about it closed with a premium of actually 110 points. Well, the concern for this market once again could be higher volatility in the January series. You've got earnings, you've got budget, which will be coming up. So if you look at the India Volatility Index yesterday, that was up nearly 5%. But just excuse me to bring in some cash market data in the FNO link today. What you saw on day one of the new year, the volumes in the cash market were really high. Look at this, over 28,000 crore. Whereas if you look at the previous years on day one, I've only included the National Stock Exchange data here. In 2017, it was over 13,000 crore. In 2016, it was about over 12,000 crore. And 2014, it was about 6,000 crore. So what is this telling you? Yesterday's sell-off was basically because of the sell-off which was seen in the cash market because the volumes were really, really high on day one of the new year. And it was largely led because of the DII selling. I think Neeraj highlighted this in his trade setup. But look at this. The gross traded value by DIs yesterday was over 6,000, and obviously FIs are absent usually on day one. That was about only 1,200 crore. The net selling figure, however, from DIs was almost 1,300 crore. So the picture is actually clear. The sell-off was in the cash market, which was led by the domestic institutions. I'm just going back to the options data once again. So if you could just pull up the option strike yesterday, the red bars are basically a put strike. The 10,100 is sitting with a lot of open interest, but yesterday what you saw was 10,600 and the 10,500 call strikes, which saw maximum open interest addition, which was seen in yesterday's trade. And lastly, a couple of stocks to keep an eye on. Reliance Communication is the new one in the ban period, so watch out for that counter. It was down over 2% in yesterday's trade. And also watch out for Reliance Naval. That stock rose almost 32%, and huge amount of long build-up was seen for that counter in yesterday's session. I'll also be watching out, in fact, for the power stocks, which was and specifically Tata Power, which touched its fresh 52-week high in yesterday's trade. Back to you, Neeraj.
Well, yeah, thanks a lot for that, Navneet. I think both me and Navneet were trying to highlight that one piece, the DI selling that came in, and I think it brings to the fore the point of caution that this month will be dominated a lot, aside of results, by also murmurs and WhatsApp messages that will float around with regards to what informed sources hear about what the government could do in the budget. I just want to make one small point here. Last year, I remember, there were a clutch of informed sources which spoke about the tax structure for the capital markets changing. And I've seen a bunch of reports that came out in the month of January with regards to this, and there was no action taken in the budget. So while this time around may be different and you never know that, but I think it will be difficult to call a spade until the event happens. So just keep that at the back of your mind if you're indeed trading the markets based on some reports that could be coming in with regards to budget actions. However, that's all that we have, at least on the day's coverage or the morning coverage. Let's kickstart now what's happening in the day-to-day stocks and news, our guests, but start off, of course, with what's happening in the commodity markets, and Pradeep Johnson to talk about that. Pradeep, good morning. How are commodities slated to shape up in the day?
Flat to positive, I would say. And to begin with, oil holds above $60 a barrel as far as NYMEX is concerned. Brent is also holding above $67 a barrel. Although gains are capped because, as we discussed earlier, those two pipeline disruptions were the key contributors to recent upsurge in crude prices. And now the report suggests that one of the pipelines in Libya has actually started functioning. That was blown out last week. If you look at other data which is coming in and that crude traders have been watching out for, US rig count remains unchanged for a second week at 747. So US crude production is not really going to rise dramatically, although it's already currently at around 48 years high. In Asian trades, volumes were low by around 30% this morning. That is what the Bloomberg report is suggesting. So not many traders are back to their trading desk as yet. Gold prices hit 3-month high once again, trading above $1,300 per ounce, while silver snaps 5 days winning streak is down by around 0.5%. To talk about base metals in Shanghai, trade started with positive bias. Nickel is one commodity which has gone up quite a bit, was up around 3% in morning trade because one of the Chinese plant had an accident. It caught fire on 31st. That was the report probably fueling the nickel up. However, reports, the latest update suggests that the plant has already started functioning and fire was brought under control without any casualties. So that's the good news. Let's see if prices really recede after that. Zinc extends 4 days again, while aluminium and copper were down by on average 0.5%. Steel is up by around 0.75%. So mixed trade as far as metals are concerned.
Okay. I bring up, that's of course the commodity pack. Bring up, remember what the world is looking like, and looking a pretty picture just that the SGX Nifty is indicating a flattish start. I'm told Hadrien Mendonca is with us, and we don't usually do this, but because of the sharp crack yesterday, it's pertinent to bring in Hadrien early on for a bit and just talk about some levels that you will be watching out for. We'll do a detailed discussion later on, but Hadrien, good morning and thanks so much for joining in this early in the show as well. But just wondering, with the sharp gash that we saw yesterday and the fact that we are looking flattish in trade despite the Asian markets by and large looking buoyant, would it be fair to assume that there could be, for the day or two, some bit of, some bit of weakness that could stay in the markets?
Yeah, good morning, Neeraj, and a happy new year to you and your team out there. As far as Nifty is concerned, definitely there is some weakness because our daily chart analysis is actually indicating that Nifty has yesterday actually created a bearish engulfing pattern. Now, if you see the way Nifty has behaved previously, whenever it has actually created a bearish engulfing pattern since May, it has been 3 times. First was in June, second was in August, and third was in November. So all these 3 times, whenever we have seen a bearish engulfing pattern, Nifty is actually corrected close to 380 to 400 points, from its peak. So yesterday, for the first time, we have seen again a bearish engulfing pattern, and I think if history is going to repeat itself, then we are going to see Nifty actually falling, a healthy 300 to 350 points from here on as well. So yesterday we already have 100 points downside already been taken out. Although it's too early, but weakness is really trying to set in. The only index that is standing out is the small cap index. The small cap stocks would still continue to outperform, but index wise, I think weakness is surely there.
Okay. So there is some weakness, and let's see how index is able to hold during the day today. But let's move on to the top stories of the day. What are the reports that the research team has read, and which are the stocks really to watch out for? Our team is ready. Nikki, Darshan and Saloni, good morning to all of you. So we begin with Nikki.
Sure. So I have a bunch of stocks that we're tracking this morning. Auto sales number post-market hours seem to be a mixed bag. TVS Motors up 39%, good show there, buoyed by your two-wheeler segment. Next on the list, we have Royal Enfield, which is sales of around 17% that we're looking at, 66,989 units sold for the month of December. SML Isuzu, that's a decline coming in for 4.6% in the month of November in terms of the sales. Coal India, that's one counter that we need to keep an eye out on. Again, it's reported a muted set of numbers coming in for the month of November. Now, remember, 7 out of 9 months the company has actually missed its production targets. However, the 9-month offtake growth picture looks to be a little decent picture, a fairly strong offtake growth that we're looking at for 7.6%. Another counter that we have on our list is PFC. That's in consortium with your REC and SBI, has lended around 11,067 crore rupees to Neyveli, Uttar Pradesh Pradesh project. Now that project is estimated to come at a cost of around 17,000 odd crore and comes in the ratio of 70-30. That's the debt to equity I'm talking about. Jindal Stainless, that's again another counter. It's going to be meeting various fund houses on Jan 4th and 5th. Also, we have Prestige Estate. Now, that's counter is expected to buy. The company said that it's going to be buying capital and stake in various entities for 342 odd crore. Thermax, that's a small order win for 327 odd crore. And last in the list, we have ITC and JK Paper. They are among the potential suitors for Sirpur Paper. That's a mint exclusive that we're tracking.
Okay, so some M&A updates coming in there, Darshan. You have read the strategy update from IDFC?
Yeah, so IDFC's come out with this strategy note, and basically they point to two themes that they believe will be important into 2018. First of all, will be the asset-heavy companies as well as the export model. That is something that could benefit. And consumption is the second theme that they're talking about. So basically the sectors that they overweight on include like engineering and capital goods, construction, metal, oil, consumer goods, automobile, media and pharma. These are the sectors they are overweight on, neutral on banks, cement, power and IT, and underweight on real estate as well as telecom. The companies that they've listed as far as large cap buys include companies like SBI, ONGC, Motherson, HPCL, Hindalco, Oro Pharma, Bharat Electronics and Ashok Leyland. And among the smaller companies that they like are Kajaria Ceramics, SpiceJet, Ashoka Buildcon and Greenply Industry. The only sell that they have is Bajaj Auto. Now, in terms of the market view over the next 2 years, they expect a 15% CAGR as far as the Nifty is concerned. They believe that mild downgrade risk to corporate earnings will continue in the near term, while they believe that from FY19 onwards, earnings should be able to bounce back.
Okay, so that's the expectation on various sectors, but financials is what CLSA is looking at, Salil.
So CLSA has come up with a note on Indian financial sector wherein they expect both rates and bank credit to increase on the back of tighter liquidity and higher inflation going ahead. And hence, on interest rates, they expect a 25 to 50 basis points hike in bank deposits and lending rates, while for credit growth, they see improvement from 4 to 5% in FY17 to 11 to 13% over the next 2 years. They also expect that financialization of savings and capital raising will continue to support banking growth, while they expect affordable housing space to pick up and grow at an annualized rate of 16 to 17% until FY22. Elsewhere, NPL resolution by NCLT, transition to Indian accounting standard by PSU Banks, as well as recapitalization for PSUs will remain key milestones for this year, while CLSA believe that transition to Indian accounting sectors will cost approximately $25 to $30 billion for public sector banks. On the other hand, election politics, new regulations, as well as wage negotiations will remain a key watch for the entire financial sector. As remember, there are 8 state-run elections lined up for 2018 along with central elections in 2019, which CLSA believes that will bring in a lot of volatility in this particular year. They also believe that new listings by non-lending financials, that is mutual fund, insurance and exchanges, will benefit from financialization of savings and low penetration levels, and hence they remain bullish on ICICI Bank, IndusInd Bank, HDFC Limited, as well as ICICI Prudential Life Insurance for 2018 overall.
Thanks, Saloni. Darshan and Nikki for the update. Mayuresh Joshi joins in on the show now. Mayuresh, what do you think? Will you prefer these new listings in financials like insurance or mutual funds over the listed PSU banks, which are actually going cheap?
Morning, Pradeep. So I think it's a mix of what I'll choose at this point of time. As Saloni was mentioning, I think on the corporate side, ICICI Bank is something that we'll continue to prefer on 3 basic counts. One, I think the entire stress that the banking industry is going through, and obviously the recognition that ICICI Bank has done in the next 2 quarters should largely be taken care of, which basically puts heat that as credit growth will pick up, there can be a substantial improvement because of the retail advances that we've seen. On the capital adequacy front, I think it's well capitalized to probably fund balance sheet expansion, and with credit costs and provisioning remaining very, very stable, my own sense is that the return ratios would improve. And third, I think the valuation of their subsidiaries as well. So you did mention ICICI Pru, you probably got AMC, you're probably looking at securities listing. So I think the unlocked value from all these subsidiaries will probably also add to the sheen, and valuations probably remain attractive. From the rural financing sides on the NBFC front, Again, I think Equitas is something that we probably discussed. So again, I think valuations looking attractive. The asset quality probably has deteriorated on the non-MFI front. But largely, I think if you take into account the next few quarters, the next 2 quarters probably will have large recognition still coming through, but it should have a cyclical recovery, both in terms of the advances growth and the kind of securitization that a lot of these firms are doing along with their non-MFI book actually growing at an healthy clip should augur well. From the PSU side, again, Pradeep, I think SBI is something that I've continued to like. With the entire transition happening in terms of the merger of the banks and the expectations of loan growth largely remaining stable along with asset quality pressures tapering off, this should do well. And as I said, for the mid-caps, Vijaya Bank on declines remains one of our preferred choices because of the stellar asset quality performance along with Indian Bank, and it obviously ranks in the top 3 in terms of performance, both in terms of reporting of asset quality and expectations of earnings growth. So any capital adequacy and recapitalization should probably even aid the bank's earnings going forward. So we remain selective.
Since we are discussing financials, your research team has come out with the report on Capital First, Mayuresh. How does that figure on your list?
So looks very, very impressive. Again, this is something that we like in terms of both AUM growth as well as expectations of the new management probably adding sheen and color to probably what can go forward as dynamics of the corporate changing very, very fast over the next few quarters. So I think the stickiness in terms of how the yields have moved and the expectations of yields remaining stable, at least for the next 2 quarters, probably in the price. Our own expectations are that the healthy loan growth along with the leverage that can get created on their balance sheet can substantially improve the earnings profile. The new management, very, very aggressive, and we probably remain very enthused by the fact that all these factors should probably prop up the return ratios. So yes, I think this stock also seems to be attractive from a medium to long-term perspective.
Mayuresh, good morning. Sorry, I just heard you mention Vijaya Bank. Why do you like this one?
Morning, Neeraj. So I think 3 basic counts on this one as well. In terms of the reported asset quality, if you look at the GNPA is reported at 7.1%, the net NPA is 4.9% for the quarter gone by. But the management remains very, very hopeful. And with the kind of quarter-on-quarter performance that we probably witnessed, I'll not be surprised over the next few quarters. GNPA is actually coming down below 5%. Net NPA is actually coming down to that 2.6, 2.7% mark. Now, if I stack up the entire PSU banking universe, Vijaya Bank, Indian Bank and State Bank probably fall in the top 3 in terms of reported asset quality numbers. And at the same time, if you look at the kind of NIMs that they've probably reported and the kind of advances growth, I'm pretty enthused by the fact that the NIMs probably will stabilize and improve going forward as the cost of funds keep on stabilizing and the yield improvement probably shows on their balance sheet. And at the same time, if you look at the net slippages ratio, that is expected to come down, which basically means that the credit cost should come down. The only point that probably works against Vijaya Bank is the lower provisioning. But with higher provisioning that is expected over the next few quarters, my own sense is that the balance sheet dynamics look very, very strong compared to something like an SBI and an Indian Bank, which remain extremely strong in terms of PSU financials. Valuations extremely cheap at this point of time, 0.5, 0.6 is how we look at in terms of the reported book. But largely, I think that expansion of book should probably take place over the next few quarters, and the ROE improvement should be very, very significant over the next 2.5 years. So remains a very, very interesting story from the mid-cap PSU bank.
Okay. Hadrien, what about the Anil Dhirubhai Ambani Group stocks? All of them active, they're taking turns now. If Arcom was a bit soft yesterday, now Reliance Naval, Reliance Capital and Infra also made a bit of a move yesterday. Reliance Power was up 16%. Anything that stands out for a trade? Would you take a trade in any of these?
It's a very difficult question because the rally that we have seen in many of these ADAG stocks has been humongous, and all that I can say is, anyone who's actually holding these stocks should continue to ride the momentum as long as it's there in the markets, and don't try and speculate too much with these, because the day we start seeing some kind of selling pressure emerging, it's going to be very difficult for traders to exit. So I think ride the momentum, that's all I can say. And fresh trades, actually, I wouldn't advise. I'd stay away from these stocks.
Okay, Hadrien, what kind of position do you see building at Infosys counter, because the stock will remain in focus with new CEO coming in today? Is there a trade really on charts?
Infosys is actually doing something very, very interesting. It is consolidating for the past 7 to 8 days. Now, it made an attempt of breaking out 2 days back, but unfortunately, we saw some kind of sell-off happening yesterday. So I think that failed attempt that we've seen in Infosys is, once again, Infosys is going to make an attempt to break out of that trading range. So I think once we see the trading range of above 1045 being broken convincingly, definitely there is a trade in Infosys, a long trade to be more specific, and I could see a target of close to 1065, 1070 if this momentum along with good volumes continue to sustain in the market. So Infosys definitely can be a good safe buy from here on, and one can keep a stop loss of close to 1020 and play for a target of 1065, 1070.
Okay, 8:45 now, and since we talk technicals, Mayuresh, just stay on. We'll come back to you in just moments from now. But let's get in Jay Thakkar, Assistant Vice President Equity Research at Anand, Rathi, who joins us on the show as well. Jay, what would be an index strategy for the day, either on the Nifty or on the Nifty Bank?
Hi, good morning. Well, I think that, as far as the index is concerned, I think it's still within the range, and which it was in the last series as well. We had seen post the Gujarat election verdict, Nifty breaking out from that downward sloping channel, and post that, it's the target for the medium term were clearly set for 10,700 to 10,800. However, as far as that series was concerned, we continuously saw that 10,500, 550 zone was acting as a very crucial resistance. We had seen that 10,500 was the strike wherein we had seen the maximum OI as far as the call options was concerned, and lately on the lower side from 10,000 to 10,400 is where we had seen the put options OI had shifted to. So the range was 10,400 to 550 before the FIs went for the holiday, and before they have come to back into the trade, the range is still that only, and I believe that till 10,400 on the lower side is not convincingly broken. Until we don't see a close below those levels, I think Nifty will continue to trade within this range. In order to gain further momentum, it really needs to take off that swing high of 10,550. The reason being is it's just not that it's acting from the derivatives point of view, wherein we have been seeing good amount of riding there at that strike. But then also when you make a clear upward sloping channel, and when you look at the chart on the linear degree as well, you will come to know that there is a clear resistance, multiple resistance and multiple trendline resistance, I would say, coinciding at 10,500 to 550 range. Hence that becomes a very important level to get taken off in order to have further swift movement till 10,700 to 800 in this series. So far, as far as the option data is concerned, in this series, I would say you won't get much clue, as we have 10,300 on the put side, wherein we have good amount of OI, and then on the upside it can go till 11,000 as well, as that's what the option data suggests as of now. So I would like to ignore that. I would clearly maintain this range of 10,400 to 550.
Okay, let's talk about specific stocks. Hadrien, to you first. Your 2 stock ideas for the day.
Yeah, as I said that the small cap index was the only outperformer, so my stocks are also from the small cap index. So first is bullish on KPIT. The stock is actually given a fresh breakout, a symmetrical triangle breakout in fact, and we've seen huge volumes, and we've also seen a positive crossover on the daily charts. So all these parameters are indicating a buy on KPIT for a target of 190. We'll keep a stop loss of 182. Our second stock is we have kept a buy on Jet Airways. We've seen a fresh 3-day consolidation breakout, and the breakout is actually indicating we could see the stock move towards the target of 865. So and keep a stop loss of close to 830 on a Jet Airways.
What about you, Jay? Looking at your index view, are you looking to short some of these stocks?
No, I would say since it has come to the lower end of the range which I have just discussed, I think it's again a good buying opportunity. Till 10,400 levels are not broken, I would say there's a good buying opportunity in the stocks like CSE, which has clearly broken out from a symmetrical triangular pattern. It retested the same. In yesterday's session, we saw that it in fact made a new swing high. And I think, again, it's a good opportunity out there. On the lower side, one can maintain a stop loss at 1,045, targeting around 1,100 to 1,110 on the upside. As far as the futures rates are concerned, the second buy recommendation would be on Bata, despite that kind of a sell-off which we had seen in yesterday's session of almost 100 points cut. But then, Bata was still trading quite strong. It has broken out from a downward sloping channel. It seems to have completed its wave 4, and now this stock is, at least in the short term, likely to meet its previous impulses equality target on the upside, and that comes to around the levels of 785. So one can buy this with a stop loss of 749.
Okay. Watch out for KPIT. That's finding some interesting mentions, by the way. Yesterday, Hadrien, yesterday the Bloomberg terminal indicated that I think there was a call from a fundamental expert as well. So do watch out for KPIT. Any choice, mid-cap IT seems to be the flavor the last 3 or 4 odd months. So let's wait and watch if indeed KPIT has some more in store. But if the trender indicator of the Bloomberg terminal is to be believed, there could be some interesting upsides for BHEL, if I'm not wrong. Remember, this is our special segment, Bloomberg Edge, wherein Jayesh Khilnani joins in every morning to talk about one key pattern on one interesting stock that the Bloomberg terminal is throwing out. Jayesh, tell us about BHEL.
Morning, Neeraj. So, the trender has in fact turned positive for BHEL as of yesterday's close, and thereby indicated that a buy signal could be on the cards. First, let's have a look at how the trender actually works. Well, it's a proprietary Bloomberg indicator, as you were mentioning, and it uses average true range as the concept behind the calculation that goes inside the trender itself. Now, it helps you to generate the buy and sell signal, and also helps you to maintain the stop loss. It gives you an indication where the stop loss should be. Very simple to decode it. You simply follow the color. That's how your buy and sell signals come in. When it turns green, you go out and buy, and when it flips from green to red, that's where you go out and sell. Now, coming to the chart of BHEL, that is where yesterday's close is, and you can see that this flat red line, which was the key resistance point for BHEL, that has actually been breached, and the price has actually crossed above the resistance line, which means that today onwards you will see that the below portion of the chart will give you a green line, and you will have the trender moving upwards. So, possible buy signal coming in for BHEL.
Interesting. Jayesh, many thanks. Just wondering, what's the efficacy of this indicator for BHEL?
So, if you had bought all the indications, Neeraj, net profit would be about 35%.
35%. Thanks a lot for that. Remember, there is some order wins that BHEL did in the country of Bangladesh. Then Thermax has gotten an order, but of course they're a different kettle of fish. But maybe, just maybe, there could be some bit of restoration in companies like BHEL. But power as a space too seems to be looking up, as we've seen in the last few days. Mayuresh, tie this in. This strength that is selectively being visible in companies like BHEL, the recovery that is being spoken about for power projects as well. Is there a linkage here, and how would you play if you wanted to bet on recovery in the power sector?
So largely, Neeraj, again, I think the kind of reform moves that the government has done, yes, there can be a significant amount of spending happening across the power value chain. But largely, I think if you bifurcate and differentiate, BHEL, for example, I think on the BTG side, yes, some orders can definitely be expected over the last 2 quarters. But a large element of my belief is still with the power transmission players and the power EPC players. So I think if you're probably looking at power for all, you're probably looking at more strengthening happening in terms of the power infrastructure first, laying out of lines and probably interstate connectivity, intrastate connectivity. And to that extent, I think these players benefit a lot. So within these segments, largely, again, transmission players like Power Grid is something from the large caps that I've always liked. The capitalization to capex ratio above 1, you probably got a well-regulated equity model, which means that the ROEs are largely safeguarded. But within the larger universe, probably I think KEC, Kalpataru, even though they have moved up significantly, look very, very interesting, both from an order perspective, which means that large orders can be expected to flow through, not just from the power side, but even from the railways in terms of electrification, and that probably would abet their earnings momentum with strong order visibility. And again, power transformer plays, so I think Voltam, transformers, rectifiers, I think a large has been said in terms of how the industry has gone through, but a large element is that a lot of the unorganized players will actually weed out, which gives a lot of opportunities for these players with sizable capacities, and probably as they leverage on their capacities with orders flowing through, that can reflect very, very positively on their balance sheets. So I'm more inclined, Neeraj, at this point of time with the transmission players and the power EPC players.
Mm-hmm. And do you see at least a tactical opportunity in GMR Infra, going by the updates that Adani, Newell, Ignite and several other companies might be interested in their power assets?
So large element again, Pradeep, is that there is a significant component of value that can still be ascribed to the kind of assets that they probably hold. But a large element has been on two counts, say underutilization of these assets at large, which has suppressed their ROEs. And the second element also is the huge amount selectively in these companies of the leverage. So I think the interest coverage itself is so huge that the cash flows because of the underutilization, not able to pay off. But if one really makes an hypothesis in terms of the asset value per se, significantly undervalued, does one go for it at this point of time? Maybe a short-term move possible, but for something seriously very, very constructive, I think the cash flows should improve, which will take time in my opinion.
Okay, so not in a hurry to buy into GMR right now. Well, if you look at the auto numbers, TVS has managed to kind of positively surprise, especially on the export front, Mayuresh, whereas it looks like iShares is slowing down. Do you think one should switch from iShares to TVS?
So large element again, Pradeep, is on the two different sub-segments that they operate out of. So iShares both a mix in terms of the heavy two-wheeler bikes and also component comes in from their commercial vehicle side of the business. For TVS, largely I think the performance has been quite reasonable over the last few quarters. Though I would add that the margins probably did disappoint me in the quarter gone by. But the management is still very, very hopeful in terms of achieving that double-digit growth. And what comes out of the stable in terms of the launch with BMW is going to be keenly awaited. So yes, I think numbers were impressive, but again, I think iShares is working on a very large pace. With the kind of bottlenecks that we saw in the plant over the last few quarters, as these bottlenecks start going out, I think they'll be able to maintain their monthly run rate. And again, I think the management is very, very clear in terms of the export markets. Now, one might really argue again that Bajaj Auto and its variants that it's bringing about can be of a competitive nature, and that competition intensity might actually have some amount of say in terms of realizations. But my stake still stays that even though valuations probably look expensive for both these counters, I think iShares, the good times will still continue at least for the next 3 to 4 quarters. For TVS, I think clearly an investor who holds on can hold on. From a fresh investment perspective, I think one should wait for significant declines.
And let's see if the CV business starts kicking in for iShares as well. I think that's what Mayuresh was saying. That's what I remember Ramdev was telling me earlier as well, that the CV business hasn't quite clicked as yet. And if CV starts clicking, then that's an added incentive. Let's wait and watch. EVA bill, a couple of other factors, all of these are positive for the commercial vehicle space. So let's see if indeed the launches pick up, the numbers pick up, and then if it's positive for some of the CV companies as well. Remember, the auto comps of some of the CV companies have certainly started doing very, very well in anticipation of all of this. Okay. A pocket that's been playing hide and seek is large cap IT. While Infosys is a stock in news today, large cap IT was up and active Friday, was down in the session yesterday. Almost all the large cap names corrected in trade. Any thoughts here, Jay, from a trade perspective? Would you initiate a fresh trade on any of the top 4 IT companies?
Well, absolutely, Neeraj. I would first of all say that this is one sector which I've been continuously saying since the past couple of months that seems to have bottomed out, I've been saying, and I have a target of around say 12,900 to 13,000 for 2018 calendar year for Nifty IT. Right, and I think that within this, obviously, if the index has to reach to those levels, then the large caps definitely have to participate. And wherein I believe that the best stock among all of these large cap IT is TCS. It has clearly broken out from the range when it was trading, although it has again corrected. but I would say that it's just retesting the breakout zone. You know, it's been correcting since 2014 October, and it's been almost like 3 years we've seen this consolidation of TCS on the upside around say 2800 to 2850, on the lower side say 2000. So this stock has broken out very clearly on the upside from this range with a clear buy crossover in its momentum indicators as well as increase in its volume. So I believe that about 2800 definitely the minimum conservative target, I would say. On a linear scale would come to around 3600, 36 to 3700, whereas on a log scale I would say this target comes to around 38 to 3900. So I think TCS is one stock. If the Nifty IT has to go to my levels of around say 12,900 to 13,000, this is one stock. But along with this, Neeraj would also like to add few mid-cap IT names. Persistence, I've been consistently saying that Persistent is likely to inch towards the levels of 9,950. At 640 I had recommended, and Mindtree too, I think, you know, looks really good. And one more stock to add on is Tech Mahindra. So these three stocks among the mid-cap, and among the large caps I would say it's TCS.
Okay. So Jay Thakkar likes Tech Mahindra and Persistent Systems. Hadrien likes KPIT. I think we've seen HCL Info make a move selectively. IT certainly seems to be in the thick of things. What about the markets though? 17 seconds left of the pre-open session. We'll start off on a flattish note. The question mark is, would yesterday's weakness come back and haunt us? It fell very sharply in the last half an hour with talks, with rumors. Let's see if indeed that happens. The world is supportive though, which is actually good news. As you saw, Asian markets are doing well, which is probably not bad. These are the first rates. You would expect a flattish start. The SGX has indicated that the Sensex rates will start happening. But the index, Nifty, all over the place. Let's bring up some of the Nifty 50 names. Reliance Industries and the HDFC Twins should come up on your screen individually. I think they corrected quite a bit in trade yesterday, about 1.5% apiece for each of these. In today's session, well, volatile. Let's wait and watch. Mahindra and Mahindra, CLSA upgrade or CLSA target price uptick, about 15-20 odd rupees. May not have too much of an impact, but let's wait and watch. TVS Motors is certainly in news, and let's see if that is moving about. Infosys is in news, and let's see if that is moving about. And then a clutch of those ADAG names will again be a flavor. So Reliance Naval, Reliance Power, Reliance Infra. Arcom is a separate kettle of fish now, but the others have now started to make a move. So Reliance Naval and Reliance Power could be interesting. 10% for Naval, Reliance Power 10% too. Early days, but let's wait and watch. Certainly seems to be brisk on open, Pradeep, at least the pre-open rates.
Yeah, if you look at JP Infra, that one is also doing well, up by around 3.5% in early trade today. Lokesh Machines, a small cap stock, up around 5% in today's trade. And also Amulya Leasing, the stock we have been tracking for last two sessions, is up by another 5% in today's trade. So that's interesting. AIA Engineering would be another key gainer that comes on my screen. If you look at some more liquid or larger mid-cap stocks, so to say, and if you look at this list, the stocks which are not doing so well is Future Retail is down a bit. You have Torrent Power correcting a bit, but not much volume. So this could be some early morning profit booking. Let's look at some more names. You have Mindtree up by around 2%. Idea after yesterday's fall has recovered, and Syngene is up by around 2% in today's trade. Century Textiles also doing well, up by around 1.5 to 2%.
Should be interesting. Let's get in Somit first though, before we move back to our guests with what brokerages are saying for the day. Two interesting names out there, Somit.
So the big brokerages first we have is Angel Broking on Capital First. Now they have initiated coverage on the stock with a buy rating and a target price of 850. Now according to the brokerage, strong capital adequacy and pickup and retail credit would ensure loan growth for Capital First, while favorable loan mix and expansion in its net interest margin would drive earnings for the company. Now the brokerage is expecting the company's asset under management and earnings to grow at a compounded annual growth rate of 23% and 32% over FY17 to FY20, and over the same period they're expecting the loan growth to be around 24%. Now the brokerage is saying that with formalization of Indian economy and increasing number of medium and small enterprises coming under this, Capital First will have new opportunities going forward. Now the company has also diversified into housing segment, which is small but has a huge opportunity going forward. Now the company is looking to reduce its dependence on bank borrowing, which would lower the cost of funds for Capital First. Now the management intends to bring down the share of bank borrowing to total borrowings to 40% by financial year 2019 versus 58% in FY17. Lastly, the brokerage says that the stock is poised for re-rating with improving return ratios. Second, we have a CLSA on Mahindra & Mahindra. Now, they have maintained their buy rating on the stock but have raised their target price to 910 from 885. Now, according to the brokerage, volumes and earnings have been improving and the current valuations look attractive for Mahindra & Mahindra. The tractors and LCV, which form around 70 to 75% of the EBIT, is set to benefit from the recovery in tractor demand and a cyclical recovery in LCV. Now, the brokerage is expecting the company's volume and EPS to grow at a compounded annual growth rate of 10% and 14% over FY17 to FY20. Now, when it comes to the SUV segment where the demand has been weak, the brokerage says that the volumes have bottomed out, and on the MPV segment, upcoming launches would be a key trigger and should boost growth going forward. Now, CLS is also positive on rural India, which would boost growth from Mahindra & Mahindra given the rise in government spending and upcoming general elections in 2019. Lastly, M&M is CLS top buy in Indian autos for 2018.
Thanks, Amit, for the update. So M&M is an interesting stock to watch out for. Hadrien, what's your call on charts? M&M, is it looking good?
Yeah, definitely. M&M is looking pretty impressive. In fact, if you do a quick larger time frame chart check, the stock has actually broken up from this symmetrical triangle breakout on the monthly charts, and it has also managed to sustain above the breakout levels of 675, 680. That is where the sloping trend line of the symmetrical triangle lie. So I think as long as we see this sustenance happening, I can definitely vouch for M&M, and I wouldn't be surprised if in the next 6 to 8 months we could see M&M crossing past even the 900 mark. So M&M definitely should be in your buy list for your portfolio in the next 6 to 8 months.
Okay, Mahindra & Mahindra, watch out, could have a brisk start. TVS Motors should be the interesting one to remember, not really on the basis of brokerage note, but the fact that the auto sales numbers were good. But I think we just discussed this fundamentally. Could start off on a positive note in the session today. What else? ONGC is looking good. The Motilal Oswal retail team has come out of the talk on Coal India, and I think Coal India numbers too have not been too bad, though it's not a trading stock, Coal India, as much, but could start off marginally higher. But ONGC looks like it's starting off on a good note, 195 and counting. There aren't enough losers, by the way, in the first 6 minutes on the pre-open. More gainers, less losers. That's a different start than what we were working with. The Nifty 50 at the end of 6 minutes showing a 0.5% uptick, which is actually not a bad thing at all. Just get up the Nifty 50. It's a 0.5% uptick that we're seeing right now. Hadrien, I don't think too many people initiated short positions yesterday. It was cash market based selling. But does this kind of negate the slight negativity that we had in the last 1 hour of trade yesterday? The start seems to be suggesting that we'll start off 0.5% higher.
Yeah, generally after you see such sharp moves in the previous session, the following one actually sees a little bit of recovery happening in the early trades. But then with this engulfing bearish pattern that I mentioned earlier when we were discussing about Nifty, that has to be negated, and the highs of 10,540 has to be broken convincingly before we could see any kind of turnaround in the short-term trend. So as long as it's below 540, I think pressure will still be on the downside for the Nifty.
Okay, we'll watch out for these names too. The broader end of the spectrum, remember, I think ADAG will dominate. Hey, Mayuresh, let me ask this to you. Are you, because of the changes that have happened fundamentally in a clutch of these Anil Dhirubhai Ambani Group stocks, recommending any? I mean, for all the brickbats that we throw, Reliance Infra has managed to deliver quite strongly and quite well.
Oh, it has, and it really goes by the intent of the ADAG pack and the management itself. I think the deleveraging seems to be very, very serious this time around and on strict timelines. So if they're able to do that successfully over the next few months and quarters, I think the reposition of faith in terms of what they can deliver with what exists in their companies probably can hold true. For Reliance Infra, as you rightly pointed out, Neeraj, The debt deleveraging probably plays very, very positively. And with the intent of the management to probably remain in the EPC business along with defense business, I think the EPC business is very, very lucrative, as I've been time and again pointing out. It probably points to the fact that the direction probably is right. And if they're able to bag orders at a reasonable amount of margin, which I'm so successfully been able to do that in the past for a lot of other EPC players, I think they can actually have significant growth in terms of balance sheet dynamics. So yes, I think Reliance Infra, Reliance Capital look very, very interesting.
Jay, do you see a trade in any of these sugar stocks? If you look at it, this morning, Bajaj Hindustan is up by around 5.5%. That is because the S4A debt restructuring they have achieved. But most of these stocks have been doing well over the last few sessions. And in fact, in global markets, sugar has gained almost 8% over the last 5 to 6 sessions. Is there a long trade here?
Absolutely, Pradeep. I think Rashtriya Sugar seems to have clearly completed the final leg of the triangular pattern. I think on the lower side, Rashtriya has a very good support at around the levels of 53, 54. I don't think that those levels should be broken going forward, at least in the near time frame. And even though this consolidation is yet to stay, from this lower end of this range, I'm expecting this stock to at least climb towards the higher end of the range. And that comes to around the levels of 70. So, the stock is trading at around 58 or so, as far as what I remember last. From these levels to, I think with a stop loss of 53, one can target 70. Now, if at all it breaks 70 on the upside, Pradeep, then it's a long consolidation, I would say, from past 2 odd years. What we have been seeing, the sugar stocks mostly consolidating, barring few like, Dhampur or the Balrampur, which are going up, or EID Parry. The other, the small cap sugar names are just consolidating. And this is one stock above 70 levels. I think it will zoom above the levels of 100 or so. So the risk level is absolutely, very much in favor of the bulls.
Okay. 4 minutes left to trade. Stay on, gentlemen. Minutes away from market open. Let's tell you all that you need to know, viewers, to stay ahead in trade today. Salil Parekh takes over as Infosys CEO and Managing Director starting today, and that keeps the stock firmly in focus.
TVS Motors reports strong December sales while iShares misses estimates.
ICICI Bank, IndusInd Bank, HDFC and ICICI Prudential are the top financial picks for CLSA.
While CLSA raises price target on M&M to 910 rupees per share, while Angel Broking initiates coverage on Capital First with the price target of 850 rupees per share.
Thermax wins 327 crore rupees order while Bajaj Hindustan successfully implements the S4A scheme. That should keep these stocks excited.
And Jindal Stainless to meet various fund houses on January 4th and 5th. The stock is marginally up in today's trade.
That's interesting. Mayuresh, any thoughts on sugar? I mean, Bajaj Hindustan is a specific case in point, news-based, but any thoughts on sugar?
No, so I think what developments are happening, as Pradeep rightly pointed out, in terms of international bosses and raw sugar prices actually moving up. And again, I think the kind of regulatory trends that we've seen both in terms of FRP and SAP pricing and the expectations again that the sugar output this time around can be quite substantial. And if one really accounts for the carryover inventory of the last sugar season along with demand expected to remain stable, the carryover inventory, if one really assumes production remaining higher year on year, should be tad bit lesser compared to the demand growth that we probably might look at. Having said that, again, the firmness in sugar prices should reflect positively in terms of earnings for sugar companies. Balrampur Chini is something that I like, but there is a diversified player called DCM Shriram. I think it's very, very interesting because it's got a mix of sugar, it's got a mix of caustic soda, and the kind of expansion plans that this company has in terms of the capex requirements, both for the distillery unit, for the sugar operations, as well as the caustic soda operations, along with the improved utilization levels for its chemical operations. I think this would remain to be a very, very interesting pick in my opinion, which has a mix of sugar, caustic soda and chemicals as well.
Okay. Another commodity worth watching is paper. If you look at some of these names, Astron paper continues to hit the upper circuit, third day in secondary market actually for this one. You also have Sri Rama Newsprint moving up by around 4%. Yesterday we had Built and Orient paper moving up by almost 10%. Mayuresh, do you see a story here?
So what has happened with China probably will probably support the margins for a lot of these companies. But But I'll remain a little bit more selective in terms of paper companies. So Ruchira paper is something that I've always liked in the past, continue liking that, both in terms of expectations of demand from the e-commerce players, and the corrugated paper is expected to grow at a very decent clip. So volume growth should probably sustain the earnings trajectory for this company. So remain positive on Ruchira paper. And out of the larger universe, again, I think TNPL is something that I've liked in the past, with expectations probably of them expanding their water reservoir capacities, which is greatly needed. And the raw material that they use, bagasse, I think the wood pulp that they probably require, a large element has probably got tied up. Though the stock has moved up, my own sense is that the earnings should still reflect positivity in terms of the reported numbers over the next 2 years. So the earnings growth should continue for this company as well.
Okay, let's nail it down to that one top trading call though from both our technical experts before we thank them. Hadrien, to you first. If you bet on one stock, your top call for the day today.
Yeah, I'll stick with BHL. The stock has broken out from this inverse head and shoulder pattern, and for the first time also sustaining convincingly above its long-term 200-day moving average. So I'd probably buy BHL and play for a target of 103 and a stop loss close to 93.
Okay, Thakkar, your top call for the morning.
Well, it's going to be on SRE Infra. I think this stock has been forming, it's been forming a good inverse head and shoulders pattern. I think the right shoulder of the same seems to have gotten over. The move prior to this was also an impulse move. I think on the upside, this stock is likely to inch towards the levels of 106. On the lower side, one can place a stop loss at 97.
Gentlemen, thank you, Hadrien as well as Thakkar for joining in today. Mayuresh, stay on. We'll take in one final thought from you. But this is how the markets are starting off this Tuesday morning, the second day of the current calendar, of the new calendar, I might add, 0.5% higher. So some bit of the push back yesterday is now getting negated. The Sensex about 1/3%, the Nifty Bank to about 1/3%, but the Nifty 50 seems to be doing okay. So that's not a bad sign. The heat map should have a lot of green, very little red, a bit of a mirror image of how the close was yesterday, I think. Yes, exactly. 5 stocks in the green yesterday at close. 5 stocks in the red today on open. ONGC, the big mover. M&M not having a bad day too. I think auto names by and large seem to be doing okay, because I also spotted a Tata Motors somewhere in the green. But the screen by and large seems to be filled with green. No runaway moves save for ONGC, which is doing well. But no big losses as well, which is actually a good sign. Infosys somewhere should come up on your screen before I move on, but just get up Infosys individually and just see it's about a 0.75% in the green. So good start for the big boy from the IT space as they get the new MD and CEO. Just a couple of other names that I want to quickly mark from the broader end of the spectrum. There are some stocks which are moving around. Firstly, TVS Motors, the December sales up 39%, so that's actually a good one, and that stock has reacted. Then a couple of other stocks in news. M&M, CLSA has hiked the target price, so this is actually one of the better moving stocks on the Nifty 50. And then the non-index names, GMR Infra. There are a bunch of suitors for the power projects for GMR Infra, and that stock is starting off 2% higher. So good going for that one too. And then a clutch of names which moved yesterday, and they seem to be doing okay today. Reliance Naval 4%, ARPAR about 4%. Reliance Infra was up 4% yesterday, up about 0.5% today. And then some of the other names in the real estate related pockets. So Jacob up 4%, Skill Infra up 5%, and HFCL, which has started a big move yesterday. I'm guessing it started, I don't know how long it'll last, but up about a couple of percentage points in today's session as well. Pradeep, what else are you spotting?
So DB Realty and Unitech continue to move up. Not so high quality real estate names as most analysts believe, but they have been doing well over the last few sessions. Now you also have Gallant Spa. This company has been moving up in last 2 sessions. In fact, yesterday also the stock gained around 15% with good volume, and the run continues. Finotex Chemical is a chemical stock which has had a surprise up move. In fact, over the last 1 week or so, the stock has gained at least 50%. Every day in the morning, it appears on my screen, actually, if you look at it. Bajaj Hindustan is up 7% now. Then you have IVRCL, which is up by around 7.5%, probably some kind of rub-off effect, going by what is happening to GMR. Let's look at MTNL, which is up 6.5%. You also have Jaisawal Neko, that is yet another penny stock, Alok Industries. So a lot of action in sub 10 rupees stock today. Astron Paper, another 5% circuit as we had seen in the morning. 3i Infotech continues to move up. This has moved from around 5 rupees to almost 10 now. Thermax is doing well, and also Uptown, Gayatri Projects would be some more mid-cap names to talk about.
Yeah, Gayatri won in the order yesterday. Remember, we spoke to them at Countdown. Another 550 crore order win. So good going. But Thermax is the interesting one. 1257. It's had this really strong move all the way from 900 to 1257. Shows that quality is getting rewarded. If Mayuresh Joshi is still with us, just taking a final thought from him. Mayuresh, I'm scanning the list of gainers. I want to talk about Thermax. Is there merit here in companies like Thermax or the likes with the belief that economy and some of the economy-facing spaces might start doing well?
No, they would. And over a period of time, I think all these stocks might get rewarded. Again, I think the book to bill is somewhere close to 1.2 times for Thermax. And again, the revenue visibility angle probably gets a little bit constrained in terms of the environment that we are talking about at this point of time. As I pointed out earlier in the show, I think you are expecting large orders to fall through in the last 2 quarters. But I think execution is going to be remaining extremely critical for a lot of these companies operating out of these spaces. So again, I think remain positive on this space overall, but within stocks, largely my opinion is I think there would be better entry points over the next few months.
So Thermax it is that we're talking about. And Mayuresh, thanks a lot for your views as well on this one, as also on the other stocks. Good having you as always.
Always a pleasure.
That's Mayuresh with his thoughts. Just bring up Thermax. Just want to mark that stock once more. It's a good move and on fairly decent volumes at start and with reason, which is actually the more pertinent point. So 3.5% intraday. Volumes not too bad at the start. Let's wait and watch what happens to this pocket over the course of the trading day. However, let's get in our big market voice for the day. Excuse me, Saravana Kumar, Chief Investment Officer at LIC Mutual Fund, joins us right now on the show. Good having Mr. Kumar. Thanks so much for taking the time out. What have you been doing? Yesterday we saw this
Good morning, and Niraj.
Sorry, please make your point, sir. Happy New Year to you.
Happy New Year to you. Yeah, to you and all the viewers. Yeah, please go ahead. Yeah.
Okay, thank you so much. Mr. Kumar, what is your view on how investing would be placed in calendar year 18? Because yesterday was the start of the year and we've seen a large sell number by domestic institutional investors. How are we placed for the calendar?
Good morning. See, calendar year 2017 was a very excellent year for the Indian equity market. Mainly the money comes from the domestic investors, mainly from the mutual fund. If you see earlier, domestic mutual fund used to get less than around say 1,500 crores SIP per month. Now it has crossed more than say close to around 5,600 crores, 6,000 crores per month kind of a SIP. And domestic funds itself invested near about $20 billion money in calendar year 2017. And foreign institutional investors, foreign portfolio investment has come somewhere around $7.5 billion kind of a number. And whether the calendar year 2018 or maybe FI 2019, whether it will be repeated like what we have seen in calendar year 2017, I have my own doubt. Maybe the last year, if you look at the calendar year 2017, the broader index has given around 31% Nifty, and mid cap and small cap has given around 48% or 58% kind of a return. But going forward, we may not see for calendar year 2018, you may not see that kind of a return going forward. But there could be a selective stock picking ideas may work, and that's what most of the fund managers and analysts, they're working in the mutual fund industry. They're looking for ideas, maybe about whatever bottom up kind of approach. There could be opportunity in some of the selective areas, but same time, whatever the risk factor, what we have to see is a rise in crude oil price in the global market. And even the election calendar for India for assembly election for 2018, we have near about some 7-8 states election is already whatever the itineraries are for 2018. Plus you have a 2019 middle the union government election. So these are the factors we have to look at, and so based on that market will take a call. And the same time what you look at today, the last 2 years or whatever, the earnings, the market has moved up mainly because of the expansion of the PE multiple, mainly because of liquidity in the system, right? And going forward, we have to see the market will move based on the EBITDA earning growth. That is more important.
That's true. By the way, Bajaj Auto numbers are out. Total sales at 2.93 versus estimates of about 310,000. So slightly sub estimates, not by a huge margin, but it's certainly about 5% off from what the street estimates were. So that's not a very handsome month for Bajaj Auto, not too dismal either. So a 35% growth is not bad. But as we've said, I think Yatin has said it ample number of times, that it's very difficult to gauge what the growth rates in November would be by virtue of what the base was. So a growth number could be varying from what the estimates are, but a 35% is not a bad number. Okay, Mr. Kumar was talking about how the market or how specific stocks will get valued. Mr. Kumar, I'm trying to talk about pockets, and since you're on the topic of autos, let's talk about them. What's your view here? The December month, because of a low base, has looked attractive, but can the momentum carry on in the new year?
See, that's what I'm saying, Mr. Neeraj. The calendar year 2017 was an excellent year for the Indian equity market. Calendar year 2018, we have to see, factors like, what I discussed a while ago, various factors. The earnings growth of the corporate plays a major role. But we are expecting calendar year 2018, the infrastructure investment will really going to pick up. Even if you look at Mumbai itself, we about the data what we are reading is more than 1 lakh crores of infrastructure investment is going to happen. So various, plus you are including the Navi Mumbai airport and others. So infrastructure sector, including the EPC contractors and even the cement players, could be made show the better number going forward possible. Like that, what we are seeing is, last 3 years, the pharma space has not delivered well. And even the IT information technology sector also, last 3 years we have not seen much of growth. It's rather given negative return for the investors. We are expecting selective pharma space will do well for a calendar year 2018. And the same, like even IT information technology also, the mid-size IT companies, still they have a very strong, customer base and, other, plus even whatever the spending from the BFSI sector in the US and other developed economy, corporates also going to spend more. So we are expecting the mid-size IT space, even some of the selective larger IT corporates also may tend to benefit, may show the better number for calendar year 2018. That means FY 2019. So like that, there could be an opportunity, could be in the agrochemical space, there could be agri-input space, there could be opportunity.
Okay.
Even telecom has done really well in calendar year 2017. So like that, there are some selective pockets that could be opportunity to make money that we have to explore and start putting money for work.
Okay, no, but I was trying to ask you about autos individually, Mr. Kumar. But anyways, I'm sure Pradeep has some more questions now.
Okay. You mentioned several factors which could have a bearing on how markets perform in 2018. To discuss the political issues, actually, yesterday's sudden fall in market was driven by some rumors that we could see long-term capital gains tax coming back. What is your expectation with regard to that? Do you think that is a possibility, looking at some kind of deficit on the indirect tax front that may arise for current year and maybe next?
See, Pradeep, good morning. See, my point is, if you look at India's market capitalization, India's stock exchange market capitalization to the GDP, it is less than 1. So that government of India and other economists and the policy makers there know the value of equity market. So the equity capital formation is more important for the Indian economy and for even providing not only the export, increasing the export, even providing the employment opportunity also. So that's the reason my broader call is the long-term capital gain tax may not be coming into the union budget in February 2018. So long-term capital gain tax, I don't think government of India will be going to charge. This is what our fund house study.
Okay, so let's see what happens. But do you think, the kind of surge we have seen in domestic liquidity flowing into equity over the last 12 months or so, would that get seriously affected if there are changes in capital gains rules?
See, point is, we have seen very good inflow into the Indian equity market, mainly from the mutual fund route as well as even the HNA route. Post demonetization development, that is one could be the reason. See, okay, assuming that there is a capital gain tax, some percentage. I don't think see today, after equity market for last 10 years, 10 years study also says, data says, the equity market is given a more than kind of around 9 to 10% kind of a CAGR. So that kind of a return going forward for other asset classes, including the real estate, other asset, or maybe gold or other commodities, I'm not expecting that kind of return is going to be there. So even assuming that government of India is going to bring the capital gain tax some percentage, maybe may not be higher side, maybe 5% or something like that also. Still we are expecting good money will come into the Indian equity market through the mutual fund route as well as even other direct route or PMS route. That's a call we are making it here, because the equity market in India is giving a tremendous opportunity for the investors, and even the GST implementation as well as even the demonetization also really helps. Helps. And more and more quality corporate also may approach Indian capital market for listing. That also could be opportunity for the Indian investors, to make money either through directly or maybe through the mutual fund route or maybe PMS route.
Okay, so this is something that we'll be watching out for. But Mr. Kumar, if you had to place some bets ahead of budget, we have at least a month to go, some priority areas that government would target, what one or two significant themes will you pick up and start increasing your exposure maybe?
Yeah, right. What we are expecting in the union budget is, because this is going to be the full-fledged union budget. After that, in the middle of May 2019 or whatever, there will be a union government election. So to February 2018 is going to be a full-fledged union budget. So we are expecting, to government to get, more focus towards a rural orientation kind of a budget. So we are expecting, more spending will come towards a rural space. Could be, that is a good, maybe we are expecting tractor space or even the cement sector, FMCG, consumer discretionary space, agri input sector, including seeds and agrochemical and other space, including two-wheeler and so these are the domain may really do well. There could be opportunity to make money in the February 2018 union budget. So accordingly, we are also, our founders also, we are rebalancing our portfolio, anticipating these are the space. And second thing is what we are expecting union budget for 2018 is more boost or maybe focus towards the infrastructure space. So infrastructure investment is going to pick up. Whatever we have seen 4 years back, NHI was developing less than 2 lane kilometers per day. Today they have crossed more than 22 lane kilometers per day. So we are expecting infra boost is going to happen. Plus whatever we discussed earlier, near about 8 states are going for election. Even the state government also investing more money for the canal irrigation and other infrastructure development. Before facing the voters in the next assembly election. So the infra story also going to pick up. That means even the EPC contract corporates, even the cement companies, even some of the capital goods companies also going to benefit for the February 2018 union budget. Accordingly, in our fund house also we are realigning our portfolio, anticipating these are the expectations.
Okay, by the way, just marking what's happening beyond the obvious names, there is some bit of traction that we're seeing in Dish TV. That stock has shot up about 6%, so good move there. Prestige Estates has bought that stake in a project, and that stock too is up about 3 or 4%, so good going for Prestige Estates. L&T Infotech amongst others is doing well, but sugar by and large seems to be having a good day. So Bajaj Hindustan was one on specific news. I saw EID Parry trading okay. There is Sri Renuka Sugars which has some gains to itself, so good going there. Do watch out for these names. Sri Renuka is about 2.5% too. So the clutch of these pockets which seem to be doing okay in the session today. Mr. Kumar, what's the thesis on commodity names? They've had a splendid 2017. I heard you mention cement, but I was actually wanting to ask you about the metal name, base metals, etc. What is the call at LIC Mutual Fund?
Yeah, see, commodities really done well in calendar year 2017. We have seen some of the non-ferrous commodities, mainly the zinc. If you look at in August 2015, it was trading near about $1,500 per ton at the LME market. Today, it has crossed more than $3,200 per ton in the LME market. So, non-ferrous segment will likely to do well. Mainly the zinc segment, commodity, and even the aluminum also there is going to be a good demand. Aluminum price also may hold, but maybe our call is the commodities, industrial commodities, the return whatever they given to the Indian investors in calendar year 2017 may not be repeated same kind of percentage. But I'm not expecting major correction in the commodities. Even the steel sector also has given a very good return for the investors in calendar year 2017. Steels tend to do well going forward in 2018 also, calendar year 2018, as well as zinc also may do well, and copper also may do well, aluminum also may do well. And crude, maybe like what we said some time back, we are expecting some more hardening in the crude in the global market because of supply disruption and other whatever OPEC and Russia's collateral, whatever they have a collateral to reduce the production and production cut and others. But other than that, industrial commodities we are expecting going to be a good year for calendar year 2018.
Mr. Kumar, we are seeing a lot of buying interest in PSUs. We saw a decent up move last week in Dredging Corporation. We have MTNL moving up for second or third day in a row. Now, what kind of reforms or resolutions do you expect for these companies? Are you overweight PSUs actually?
See, PSU, if you look at, you are talking about the PSU manufacturing side, selective PSU manufacturing will do well because of some extent Government of India's divestment. I'm not expecting the management controlled divestment like what did happen to the VSNL or CMC maybe in 2001-2. That kind of a story may not happen near future. But same time, some divestment will take place some extent. And so then plus they're also focusing more towards improving the corporate governance in most of the manufacturing PSUs. That's what Government of India is focusing now. But PSP, if you look at the public sector bank, selective larger public sector bank will do well going forward because of recapitalization and whatever they want. That is going to helpful majorly. And second thing is what we observed is even the management reforms, everything Government of India is focusing for the public sector bank. So selective larger public sector bank will do well going forward. Like that, some of the selective manufacturing public sector units also may do well going forward.
Okay. My last couple of questions to you, Mr. Kumar. One of them is on technology. What are your thoughts there? I mean, the fact that Infosys as a new CEO notwithstanding, technology by and large seems to be the flavor at the broader end of the spectrum. We've seen a clutch of mid-cap IT names do really well. Where are you spreading your bets, if any?
See, what we discussed a while ago, last 3 years, IT sector has given a negative, less return to the investors. But going forward, see, if you look at Indian mid-cap IT space, tend to do well, mainly because of the strong bondage what they have with the selective Fortune 500 or Fortune 500 clients, mainly in the North America as well as in the European. That is also going to be beneficial for the Indian IT corporates, mainly the mid-size as well as even the larger size. And second factor is, if you see the North America, mainly the US, BFSI spending is going to move up. BFSI budget allocation for the IT spending is going to move up. That is also going to be beneficial. And plus the whatever Fortune 500 corporate clients, whatever the allocation for the IT spending, the budget number is increasing, the quantum is increasing. That is also beneficial for the Indian IT corporates. So we are positive for the Indian mid-size IT corporates. Maybe some name like Persistent or whatever. Then even for the larger IT space also we are positive, and accordingly we are also realigning our portfolio.
A segment that was largely ignored by most fund managers till about 2016, I would say, has come into focus now is real estate. It has been one of the best performers for 2017, and looks like even last 2 days we have seen a lot of buying interest coming in from HNIs, PMS and all. Do you think there are at least a few good names that one should pick up and hold on with a longer term perspective, not at all with the trading idea?
Yeah, I agree with you. For a long-term investment point of view, we are finding selective quality, well-managed, real estate companies will do well. But what we observed is there is a good demand for the commercial real estate as well as even for the residential real estate in Bangalore and even Chennai and selective parts in like Hyderabad. So the corporates which are focusing towards mainly the Bangalore market on the commercial real estate as well as even the residential real estate is going to benefit going forward. And second factor is even the RERA, Real Estate Regulation Act, also going to be beneficial for the investors, as well as even for the users of the residential property going forward. That is a positive development for the real estate market. And third is, if you see the inventory, whatever it piled up, earlier for the unsold inventory mainly in Mumbai as well as even the NCR region, that number is coming down. That's a kind of indication that, the demand will pick up maybe with a lag effect, maybe for another 2 or 3 quarters lag effect, the demand will pick up mainly from the user point of view, not for the investors point of view for the residential property, as well as even for the commercial real estate. So these are the reason we are selectively positive on some of the real estate corporates, mainly who are focused more towards Bangalore and Chennai and Hyderabad, and so we are positive for a medium to long term point of view.
But the biggest concern has always been the kind of leverage that these companies have and also corporate governance issues. So do you think that situation has improved?
See, the corporate governance will improve definitely. So because the reason is, even most of the real estate corporate management and what promoters also understood that, keeping improving the corporate governance, they can able to increase their whatever net worth or whatever their personal market capitalization by increasing the market capitalization of the particular corporate. So that they understood very well. So the corporate governance will improve. But what happened because of the RERA implementation, as you are aware, over a period of time, the small builders will be wiped out. I'm not saying for 2018, maybe by another 2 years or maybe 3 years down the line, if you see many small builders and small builders who cannot able to manage so many things and and who cannot able to meet the RERA Act and other RERA's policy, RERA's policies, they'll be wiped out from the system going forward. That is beneficial for the organized real estate developer who has a good corporate governance and who has a stronger balance sheet and who has a some extent less leverage. These are the corporates will tend to benefit going forward in the real estate market.
Okay. Mr. Kumar, really appreciate you taking the time out and joining us today, and to you and your team, a very happy 2018. That's the Chief Investment Officer.
Thank you, same to you. Bye.
Of
Thank you.
LIC Mutual Fund. The market's lying absolutely flat though, come off completely from the levels that we were trading at. So bring up the intraday of the Nifty once before we take that break. And look at that, just come off completely, the Nifty Bank too. So, and in the red now, all the key indices. So that's not the greatest of starts, but could it be a good start for what will arguably be amongst the first issues of 2018? That's what we discuss with Bandhan Bank's Managing Director, Mr. C.S. Ghosh. He joins us on the other side.
Are we live?
Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
More than just business news, where news for business people.
Welcome back. You're watching Indian Open. Bandhan Bank started the year in style. The draft red herring prospectus has been filed with the market regulator for the bank to go public. This morning, we are joined by Chandrasekhar Ghosh, founder, MD of Bandhan Bank, to help us understand what the experience has been since they have converted into a scheduled commercial bank and what they expect the business to look like from here on. Good morning, Ghosh. Mr. Ghosh, thank you so much for joining us. Appreciate you taking the time to speak to us. So let me just first start by asking you as to what the experience has been like since you have gotten the banking license. What have you focused on? You already had a strong base of clients, but what has been your focus on the deposit side, or have you sort of, diversified the product mix on the lending side that you're offering your customers?
Thank you, and good morning to all of you. This is a very good opportunity for us. We got the universal bank license, and we started the bank in the 2015, 23rd August. So as per regulator license compliance, we should be like to, within 3 years after the opening the bank, we should be like to listing of the bank. So that we are submitted our DRHP yesterday to SEBI. This is one side on that. Other side is there's a very good journey as a microfinance institution to come as a full-fledged bank. So our portfolio size is there, 90% is a microcredit, which is the small loan we have given to the poor women, and they are use it to start a new business, or they are extend their existing business. So their business running very good way, and accordingly our NPA has also very low on that. So in that sense, the credit box size is a very good. We are the largest microfinance institution when we are where as a microfinance institution. Now, as a bank has come, last 2 years we performed bank as a very good. So whatever we are the very challenging, people say that how the microfinance institution will get the deposit. We are not only depend on our microcredit borrowers deposit, we are open that the more 800 branches across the 33 states, and that branch also open the account to the across the country, any segment of the people on that. So we are very happy to say that the 2 million customer we got the rich people and middle class also. So that our deposit has come on that up to the September figure, it is in 25,442 crores deposit in the bank.
Okay, Mr. Ghosh, can I just interrupt you for a minute, because I had a follow-up question both on the lending and the deposit side. So you said that 90% is still microfinance. What do you think the proportion will be, say, 2-3 years down the line? Are you expecting to focus on microfinance on the lending side, or do you think it will come down to, say, what, 70% maybe, or a little bit lower? Microfinance as a portion of the overall book, sir.
No, microcredit, if you see that, it will be continue on that way because their demand is more, and also market is very, very free, and the untapped people is a very big, large. And there is an also area is called the micro, small and medium enterprise, which is segmented till now formal financial institution, not yet reached in that 7% of the total demand. And we are addressing it on that as of now. And affordable housing also, we have a very good demand. Then we are also started on that. So accordingly, we say that these are the 3 segments we are focusing on that.
So you will not, sir, for instance, look to, for the want of a better word, copy large universal banks and get into retail lending in a big way, go into metros or tier 2 cities. You will focus on your customer base, sir, even over the next 5-year period?
According to last 2 years experience on that, there is a big demand in the market, tier 2, tier 3, tier 4, even metro and urban. We will be like to cover all side on that.
Okay. Sir, on the deposit side, so your CASA is closing in on 30%, 28 odd percent. Is that correct, sir? Can you give me a little bit of sort of experience on the deposit side? Where are you getting the deposits from? You mentioned earlier that it's not just your existing client base.
CASA is a very good deposit base. I given that the 25,442 crores. Out of that, we have the 28.18% CASA as on September 2017. And also it isn't very focused on that, the retail. We are focusing on that, and the customer also given the very good amount of deposit, which is at 76.09% of our retail deposit out of this 25,442 crores.
Okay. Sir, next question is on the asset quality side. Now, you're very heavily microfinance focused, but your NPA numbers are very, very, sort of good and manageable. Some of the other microfinance companies have had a problem in the last 12 months because of demonetization, etc. What has been your experience? How have you managed to escape the asset quality problems that some other businesses in your segment have faced?
No, this isn't because of the 90% of the portfolio in a microcredit. We have the last 17 years running this microcredit in our country. So we learn from that from our customer. That is the two things is a very initially it is very required on that. How quick we are giving the credit to the customer without any hazard. And it will be need to give to the doorstep to them. Third point is a weekly installment helped us to get the good repayment on that, because sometimes if I go to this fortnightly and monthly, so sometimes there is any issue has come family, immediately they spend the money. So month after that month, when any of the MFI or bank are going to collect the installment, and that time there is no money in the home. So that is one challenge is there. So that weekly have been helped us on that. And the final point is there, the relationship with the customer has given the very good the opportunities to maintain the repayment rate in there. So that the group meeting who are the customer is taking the microcredit loan, that the group meeting, it will be like to compulsory for all attend by the borrower, compulsory to the all of the microcredit borrower. So if it is compulsory to attend the group meeting, then our people will get the more opportunities to personal meet and personal feelings, so that can be helped on that to minimize the NPA on that.
Okay. Mr. Ghosh, I have, two last questions. One is on your geographical mix. So a large part of your business, I believe, still comes from West Bengal. Can you tell me over again a 3-5 year period as investors look at your company, what do you think the overall, geographical mix will look like? Because, while you know the geography to which you lend right now, there are benefits of diversification, although some could argue that you should stick to your core strengths. How do you see it, sir?
We are well diversified according to the population of the state, because you know that the West Bengal have the population and not equal to the population of the Tripura. So that in that sense, or any of the south one state on that. So in that sense, if the population is high, and the bank opportunities to reach to the more people in that area. So in that sense, we are not in a restricted on any of the state on that. We are diversified. We are now in 33 states and union territory working on that. But our some portfolio, because we started from West Bengal, so we have some old borrower, their loan size is little bit higher, so that their amount wise is in West Bengal is a little bit nearly 40% on that. And we also in Bihar, we also in Assam, Tripura, we have in the UP, we have in the Maharashtra and Gujarat. So I feel that we are well diversified. but we have needed some time on that to reach to more other states in the population wise. No, if you see that the UP and the Maharashtra has a big number of population, but we are gradually also increasing in there. So in that sense, we are very well diversified in a geographically on that.
All right, Mr. Ghosh, we'll have to leave it here for today, but look forward to interacting with you more as we get to the IPO. Thank you so much for joining us today.
Thank you. Thank you.
Well, that's Bandhan Bank, and I think Ida spoke about it at length on Indian Open as well, the first word as well, and some of the things look impressive. Now you heard the management too. Let's wait. Closer to the IPO, we'll give you more details. However, what is pertinent today is technology and Infosys, because Salil Parekh joins the Infosys family to discuss about the implications of the same. Let's get in a veteran himself, an expert, Sudin Apte. We've spoken to him a number of times in the past on the Infosys issue, and it's pertinent that we have him today as well. Sudin, good having you. Thank you so much for taking the time out. Thanks for being patient with us as well today. You know, Agam was speaking about your thoughts in the morning.
I can hear you properly.
Okay, Sudin, can you hear me now?
Not properly.
Sudin, can you hear me now?
Slightly better.
Okay. What is your view on what Salil Parekh's joining means for Infosys?
Sure. You know, I think this starts a new era or a chapter in the history of Infosys. So I guess. So from that perspective, it's an important moment. This is the second CEO that they're bringing from the outside the organization. And on the backdrop of what company has seen in last 2 to 3 years or a little bit longer than that, I think it's important that, this journey of the new CEO or the leadership actually takes them to or sort of takes them back to the glory where the company really belonged to. So I guess, date is not important, but, a new phase of Infosys starts, which hopefully will take the company back to high growth, high margin, and possibly the leadership position that company enjoyed.
I believe you also think that from an experience and from a profit perspective, Salil is a great fit for Infosys.
Well, obviously, I think, let me first say this way, not really commenting on an individual, positively or negatively, but I think, prima facie, it appears that it's a good fit. He has industry experience, has been working of a similar or a little bigger size company. So have, know the drill well, one. Two, has got good connection with the client, especially on a financial services and some of the larger vertical which match with Infosys's profile. So, on face of it, clearly looks like a good candidate. He has a proven track record of, demonstrating the value of global delivery, mergers and acquisitions, etc. So there's a good possibility or likelihood that, he also would get a good or command good respect in, in Infosys leadership. So I just wish him good luck, and, it's important for the industry also that the company gets back to the track and start performing.
It's true. Sudin, I don't know what thoughts you have here, but a clutch of investors who brokerages have spoken to seem to be hoping that as impeccable as Salil Parekh's credentials are, they hope that this doesn't curtail Nandan Nilekani's tenure at Infosys. You think that despite this move, Nandan will stay on for a bit while the times are, well, not turbulent really, but for lack of a better word, turbulent?
Well, I think I really not a privy to what their internal decision is, but it only makes some sense that Nandan is around for some time till Salil settles down and, take the control and some performance starts looking in. I think the company has a challenge in terms of growth especially, but also margin in last several quarters. So I think from investor perspective, obviously one would look forward for getting the company back to the track. Now, when there is a leadership change, obviously there is some level of uncertainty, possibly a good number of changes. So, while all these, turmoil may be a little negative word, but, for want of a better word, I will continue using that word. So while this turmoil goes on because of leadership change or with a new person coming in, I think having Nandan around may be a good idea for 2 to 3 quarters. So Salil settles down, his new team, I'm sure there will be some changes, settles down, his new strategies articulated, and is reaches to the top leadership as well as clients. So during all that phase, when he gets company back to the track, it will be a good idea if Nandan is around and supports him in terms of falling things in place, and if there are any sort of a mid-course corrections required or any support required in terms of people, in terms of client relationships, I think Nandan being around would be a good idea for 2 to 3 quarters for sure.
Sudin, my final question to you really, the last 3 or 4 months, we've seen a bit of a re-emergence of mid-cap IT as a pocket. From a stock market perspective, the markets have rewarded mid-cap IT companies very well. To be fair, they've also shown results and guided to decent growth. Do you think this is a bit of a turn around for mid-cap IT and it could last for a bit longer, or will it be short-lived?
Well, I have a little different take here. Rather than looking at large cap or larger companies versus mid-sized companies, I think, the key really, especially for next 12 to 18 months, is going to be how companies are transforming themselves. We are at a crossroad where there are dramatic shifts in technology. There are dramatic shifts in terms of what solutions clients are looking for and are buying. The buyer profile have drastically changed with, large number of our large quantum of budget going from IT to businesses. So, every technology company, not only Indian, but even multinational services companies, or for that matter, even software firms. So everybody in the technology area need to undergo a sizable change. How that transformation is done in the company is actually going to decide their adoption rate by the client. Clients have moved very fast. Clients are looking for very different value. So, whether it's a large company or a mid-sized organization, how quickly they're transforming themselves to suit the new reality is actually going to be the deciding factor than really the large cap and small cap. Obviously, you have a couple of advantages with larger organizations because of the depth of pocket, because of the reach of the client, because of the quality of people, etc. But, there are some mid-sized companies, and I've been saying some names like Persistent in CPG and retail areas, companies like Mindtree, etc., who have been able to transform quickly in pockets. So it really depends on how companies transform, and that would really decide, at least for next 1 or 2 years, how the companies will fare in terms of their growth and margins.
Okay, Sudin, appreciate you taking the time out and joining us. We are out of time completely on this show. Thanks for being a part of Indian Open today. Appreciate your time. That's the view from Offshore Insights. The market's lying absolutely flat, but come off from the highs of the day. That's the key thing. Started off 0.5% higher, but haven't been able to sustain that. Let's wait and watch. It'll be interesting to see if in today's session too, we have a lot of cash market selling, or whether this is more of futures positions that are getting into place. But from Ira and me and the team that has put this leg of Indian Open together, thanks so much for watching. Stay tuned though. The FNO show takes forward the action on the other side.